Welcome back, everybody, to another deep dive. You know, we love digging into these investor presentations, and today we've got a really interesting one.
Yeah, it should be good.
Mankind Pharma, Q2 FY25.
Fresh out.
Yeah, November 5th, 2024. So let's jump right in and see what they've been up to.
You know what's really interesting about Mankind Pharma? They are not just surviving, they are thriving in the Indian pharmaceutical market. And for 7 years running, they've been India's #1 in prescriptions.
Wow.
Which, says something about their understanding of the market and their ability to meet consumer needs.
Yeah, and they are not slowing down at all. Let's look at some of these numbers. They're reporting a 13.6%.
Whoa.
Year-over-year revenue growth hitting a phenomenal INR 3,077 crore.
That's huge.
It's not just growth. That's like,
Domination.
yeah.
And it's not just about growing, it's about growing smart, growing efficiently. And they're doing just that with a healthy EBITDA margin of 27.7%,
Right.
which means they're keeping those costs under control and maximizing profitability.
It sounds like they're playing offense, too. I was reading a quote from Rajeev Juneja, who's their vice chairman and managing director,
Okay.
and he was talking about how they're actively carving out their over-the-counter business. They also recently acquired BSV.
Oh, yeah, the BSV acquisition, that's interesting because they're really making a move with this one. BSV is known for its gynecology and critical care products.
Right.
So it's not just about adding products, it's about strategically positioning themselves in segments with high barriers to entry.
Yeah, they're not messing around.
No, they are aiming for the big leagues.
And speaking of big leagues, let's talk about their dominance in the Indian market. I mean, 7 years in a row holding that #1 spot for prescriptions, and this quarter, they're boasting a 15.4% prescription share.
That's right. You don't just stumble into that kind of market leadership.
No.
It takes a really deep understanding of the Indian market and a distribution network that can reach every corner of the country.
Yeah, it's like they have this pulse on what the Indian consumer needs and wants. And speaking of understanding the market, let's talk about their chronic segment growth, because they are outperforming the industry, averaged by a factor of 1.3.
That's incredible.
Which tells me that they're shifting towards those higher margin products that create a stable long-term revenue stream.
Exactly. They're building a strong foundation for sustained success. Think of it as like building a skyscraper. Those chronic segment sales are like the bedrock.
That's a great analogy.
Yeah, so they can really build on that.
And it makes sense when you look at some of their star performers.
Yeah.
No beggar. Their insulin glargine product, it's seen over 100% growth.
Wow.
And their respiratory inhalers, those are seeing a combined 22% growth.
It's amazing. And, it speaks to their ability to tap into those growing healthcare needs in India.
Absolutely.
Yeah.
Now let's move on to another area where they're really excelling, and that's their consumer healthcare business. Because with a 20.4% year-over-year growth, driven by brands like Manforce, Gasifast, and HealthHawk, they're really connecting with consumers.
They're crushing it in that segment. They're really good at building brands that people trust.
And they're not stopping there. They've actually carved out this over-the-counter business into its own separate subsidiary.
Smart move.
Which shows me they're serious about unlocking even more growth potential.
Right. It allows them to be more agile and really focus on what works for the consumer market.
Yeah, and speaking of expanding reach, let's not forget their export business.
Right.
Because they saw a massive 57% year-over-year growth.
That's huge.
Driven by expansion into existing markets and launching new products. So their ambition is clearly extending beyond the borders of India.
This is a company that's not afraid to think big and to play on a global stage.
Yeah, and no deep dive would be complete without examining their commitment to ESG, environmental, social, and governance factors.
Absolutely.
And Mankind Pharma does not disappoint. They are making some really serious strides in waste reduction, water recycling, and using renewable energy.
Yeah, their achievements are impressive, but what I find really remarkable is their ambition, their goal to become carbon neutral by 2030. That's a bold statement.
Yeah, carbon neutral by 2030.
That is.
That's incredibly ambitious. How realistic is that goal?
It's definitely a challenging target, but they seem committed to making it happen. They've outlined some specific initiatives and investments to get there.
Like what?
Well, they're really focusing on switching to renewable energy sources and optimizing their operations for energy efficiency.
So they're not just talking the talk. They're actually putting these concrete plans in place to achieve these goals.
Exactly. They're walking the walk.
I love that. It's so refreshing to see a company taking such a comprehensive approach to sustainability and It's not just about the environment, right?
No, it's not.
They're also focusing on those social and governance aspects, which really points to a holistic view of responsible business practices.
Yeah, they're actively working on stakeholder engagement strategies and focusing on wildlife conservation and ensuring those high standards of compliance and ethics across their operations.
So it seems like they found this really incredible balance between profit and purpose,
They have.
which is commendable.
It is.
So let's shift gears a bit and talk about their overall strategy for the future. What are Mankind Pharma's key priorities moving forward?
Well, their strategy is really multifaceted, which, suggests a dynamic and forward-looking company.
Right.
They're focused on increasing market share. They're venturing into new therapies. They want to grow that consumer healthcare business even further. And they're continuing to pursue those strategic acquisitions like the BSV deal we talked about earlier.
So they're not just reacting to the market, they're actively shaping it.
Exactly. They're playing chess, not checkers.
I like that.
And one thing that I find particularly interesting is their focus on those high entry barrier markets and forming those strategic in-licensing agreements with multinational corporations.
So they're not afraid to collaborate with the best in the industry to achieve their goals.
Exactly. They're smart about leveraging existing expertise and technology.
Yeah, and let's not forget about their financial strength, which gives them the resources to make these bold moves.
Right.
They've consistently delivered strong revenue and profit growth over the past few years. They're not just surviving, they're thriving.
Absolutely. Their balance sheet is rock solid, and their cash conversion metrics are excellent, which means they have the financial firepower to invest in future growth.
So they're not messing around. They got a war chest ready to deploy, and they've proven that they know how to manage those resources effectively.
They do.
It seems like they're fueled by this insatiable hunger for growth and innovation. They're not afraid to take calculated risks and make bold moves to stay ahead of the curve.
They're playing to win.
But can they maintain this impressive momentum, especially as they venture into these new territories and face increasing competition?
That's the million-dollar question.
That is the question.
And that's what we'll explore in the next part of our deep dive.
Stay tuned.
Welcome back to our deep dive into Mankind Pharma.
Okay, so we spent a good amount of time in part one talking about some of those high-level numbers, but let's dig a little deeper and figure out what's really driving their success. How did they manage to achieve such a dominant position in the Indian market?
It's a brilliant blend of strategy, consumer understanding, and an amazing distribution network. I mean, think about this. They have 23 brand families worth over INR 100 crore each.
That's incredible.
It's not just making products, it's building brands that resonate with consumers.
Yeah, and then it's about getting those products to them.
Absolutely.
And their distribution network is like a well-oiled machine. They've got over 13,000 stockists across India.
Unbelievable market and distribution coverage. They reach over 5 lakh doctors.
Wow.
With a field force of 16,000 plus people.
That's a lot of boots on the ground.
Yeah, it's hard to compete with that.
It is, but it's not just about getting those products out there, right? They also have really strong in-house manufacturing and R&D capabilities.
Totally. They control a good chunk of their production. Around 75% is done in-house.
Which gives them a lot of control over quality and cost.
Exactly. And that their innovation track record is phenomenal. Remember when they commercialized dydrogesterone?
That was a game changer.
It was. It really shook up the market.
And it shows that they're not just following trends, they're setting them.
Absolutely.
So we talked a lot about their pharmaceutical products, but their consumer healthcare franchise is a major contributor to their success as well.
Yeah.
What are some of their key wins in that area?
Oh, well, they've got 4 brands that are ranked #1 in their respective categories in the consumer healthcare segment.
Like?
Brands like Manforce, GassoFast, HealthOc.
Oh, yeah, those are big names.
Those are household names in India.
And they've had some really clever marketing campaigns, too.
Oh, absolutely. Those Bollywood stars and those sports icons really help build that brand recognition.
Definitely. So let's switch gears for a second and talk about their financial performance, because we touched on it a bit in part one, but I want to dig in a little more. They boast a strong balance sheet and these consistently strong cash conversion metrics. In fact, they have a net cash position of INR 3,260 crore.
Yeah, that's a lot of cash on hand.
It is. It's a serious war chest.
Yeah.
What do those numbers really mean, though?
Well, it means that they're generating a lot of cash from their operations, which is a really good sign.
Okay.
It shows they're a financially healthy company that's not just growing, but growing sustainably.
Right, and we've seen their revenue and their profits steadily increasing over the past few years. But how do they actually stack up against the competition in the Indian pharmaceutical market.
They are consistently outperforming the industry average in terms of volume growth.
Yeah.
So they're growing at a rate that's 1.4 times faster than everybody else.
They're not just playing in the same league. They're like,
They're in a different league.
yeah.
Yeah, and their chronic share, which we discussed earlier, that has increased significantly as well, from 28% in FY18 to 35.5% in FY24.
So they're really capturing a larger slice of that pie.
They are, and it's smart because they're shifting to those higher margin chronic products, which helps create a stable and predictable revenue stream for the future.
So it's all part of this long-term strategy.
It is. It's about playing the long game.
So we talked about their financials. We talked about their growth. Let's talk about their commitment to ESG, environmental, social, and governance factors.
Okay.
Because it's not just about profits.
Right. No, absolutely not.
It's about building a sustainable business that actually benefits all stakeholders.
Right, and they're not just talking about it, they're taking action. They're aiming for carbon neutrality by 2030,
Wow.
plastic neutrality in FY24,
So next year,
and a 50% reduction in groundwater intensity by 2030.
those are some seriously ambitious targets. It
Yeah.
sounds like they're going above and beyond just checking those boxes.
They are. They're really trying to make a difference.
Yeah, but how achievable are these goals? I mean,
Yeah.
carbon neutrality by 2030, that seems like a really tight timeline.
It's definitely challenging, but they've put together some specific plans, and they're making investments to get there.
Like what kind of investments?
Well, they're investing in renewable energy. They're trying to improve energy efficiency. They're looking at sustainable packaging solutions.
So it's not just wishful thinking. They're actually putting their money where their mouth is.
Exactly. They are.
That's great to see. And their ESG commitments extend beyond just the environment, right?
Oh, yeah, absolutely. They're involved in wildlife conservation efforts. They're implementing ethical sourcing practices in their supply chain.
Okay.
And they're trying to create a positive work environment, promote diversity and inclusion within the organization.
So it's really this holistic view of sustainability.
It is. It's about considering everybody.
Yeah, the planet, their employees, the communities they operate in.
Mm-hmm.
And you know what? I think their commitment to ESG might actually give them a competitive advantage in the long run.
I think so, too, because consumers are really starting to pay attention to these things.
Yeah, they care about the
Yeah.
impact of their purchases.
Right. So they're more likely to support companies that are doing good.
Right. So it's not just about selling products anymore. It's about building a brand that actually stands for something.
It is. It's about values.
Yeah. So circling back to their financial performance for a moment.
Okay.
One thing that really stood out to me was their consistent outperformance in volume growth.
Yeah.
How are they managing to grow so much faster than their competitors?
One of the key factors is their focus on affordability.
Okay.
They offer high-quality products
Mm.
at really competitive prices, which makes them accessible to a wider range of people.
So they understand the needs of the Indian market, and they're really committed to making healthcare more affordable.
Absolutely. But it's not just about being affordable, it's also about maintaining high quality.
Right. Because you can't just cut corners to save money.
Exactly. They have a reputation for producing high-quality products that meet those international standards.
Right.
They have rigorous quality control processes in place. They invest in R&D to ensure those products are safe and effective.
Yeah. So they're not compromising on quality to achieve affordability.
They are not.
And they're not afraid to innovate and invest in research and development to stay ahead of the curve, like we talked about with dydrogesterone.
Exactly. That was a major breakthrough that really highlighted their capabilities.
Yeah, so they're not just riding the wave of growth. They're creating it through their innovation and their understanding of the market.
They are.
But they're not content with just staying in their lane. They're making strategic moves to expand into these new areas, especially those specialty and super specialty segments.
That's where things get really interesting because they're moving beyond their traditional strengths and trying to establish themselves as a leader in these higher margin segments.
So it's smart to diversify their portfolio and tap into those new growth opportunities.
Absolutely.
So what are they doing specifically to expand into these specialty segments?
They're using a multi-pronged approach.
Okay.
Acquisitions, in-licensing agreements, building their own internal R&D capabilities.
They're not putting all their eggs in one basket.
Not at all.
Can you give us some specific examples of these strategies in action?
Sure, they've entered into in-licensing agreements with companies like AstraZeneca, Novartis, Takeda.
Oh, wow. Those are big names.
Yeah, and it gives them access to cutting-edge technologies and products.
So it's a smart way to kind of leverage the expertise of those established players.
Exactly. It allows them to expand their product portfolio and enter new therapeutic areas much faster.
So they're combining internal innovation with these strategic partnerships
Yes.
to really accelerate their growth. But what are some of the specific therapeutic areas that they're targeting?
They're focusing on cardiac, anti-diabetic, respiratory derma, and gastrointestinal.
So areas with high unmet needs and significant growth potential.
Exactly.
But they're not just launching Me Too products, right?
No, they're bringing innovative and differentiated products to the market, like Meptaz, which is their in-licensed product from Novartis. It's a top performer in the heart failure segment. And their Nobeglar insulin glargine product has seen amazing growth since its launch.
So it sounds like they're making a real impact in that specialty market.
They are.
But what are some of the challenges that they might encounter as they venture into these new areas?
Well, specialty and super specialty segments can be more complex.
Right.
They require specialized knowledge and expertise. So they'll need to build up their capabilities in these areas, whether it's through acquisitions, partnerships, or internal development.
And I imagine the competition is pretty fierce in those segments as well.
Oh, it is. You're going up against the biggest players in the industry.
Yeah, so they're going to have to really differentiate themselves.
Absolutely. They need to offer something unique, and they also have to navigate all those complex regulatory landscapes and reimbursement policies, which can be a nightmare.
It sounds like a lot to juggle.
It is.
But they've faced challenges before,
They have.
and they've overcome them. Do you think they have what it takes to succeed in these specialty segments?
You know, they have a proven track record of success. They really understand the market. They're willing to adapt. They're innovative. But I think the most important thing is they have the ambition and the drive to succeed.
They're not afraid to take risks.
No, they're not.
But can they maintain this momentum as they try to expand globally?
Ah, that's the big question.
That is the question.
And that's what we'll explore in the final part of our deep dive.
Okay, so we're back for the final part of our Mankind Pharma deep dive. We've covered a lot of ground.
We have.
Their impressive performance in India, their ambitious growth strategies, their commitment to sustainability. But the big question looming over all this is, can they really become a global pharmaceutical powerhouse?
It's the question everyone's asking, right? They have the track record, but going global, it's a whole different ballgame.
Yeah, let's play devil's advocate for a minute.
Yeah.
What are some of the hurdles they might face trying to expand their global footprint?
Well, I think one of the biggest challenges is going to be competition. The global pharmaceutical market is fierce. There are some really big players out there with deep pockets and years of experience.
Right, so what works in India might not necessarily translate to success on a global scale.
Exactly. They're going to need to find a way to stand out in a really crowded market.
And it's not just about the competition, right? There's also all those regulatory hurdles.
Oh, yeah. Each country has its own set of rules and regulations and approval processes for pharmaceuticals, and navigating those can be a real headache.
I imagine it's a lot of red tape.
It is.
And then you've got those cultural differences to consider. What works in one country might not resonate in another.
That's right. They're going to have to adapt their products, their marketing strategies to different tastes and cultural norms.
It's a tough balancing act.
It is.
You know, trying to stay true to their brand while also appealing to a global audience.
And then there's the whole issue of intellectual property protection.
Right.
Pharmaceutical companies spend a fortune on research and development. They rely on patents to protect their innovations.
Right. But enforcing those patents globally, that's a whole other challenge.
It is, especially in regions where intellectual property laws aren't as strong.
So there are definitely some risks involved.
There are.
But let's not forget about Mankind Pharma's strengths. They have a phenomenal track record. They're in a strong financial position. And they've shown that they really understand how to win in a competitive market.
That's right. They're not newcomers to this game. They've proven they can adapt. They're not afraid to take calculated risks, and they execute their strategies really well.
And remember their commitment to sustainability. I think that could actually be a huge advantage for them globally.
I think so, too. Consumers are more and more conscious of these things.
Yeah, they want to support brands that align with their values.
Exactly. So Mankind's focus on ESG could really make them stand out.
So their commitment to doing good could actually boost their global success.
Absolutely. It's a powerful combination.
It is. So while there are definitely challenges ahead, it seems like Mankind Pharma has a lot of the right ingredients for global success.
They do. They have the foundation, the vision, and the willingness to adapt.
It's going to be exciting to see how it all plays out.
It will.
Well, that brings us to the end of our Mankind Pharma deep dive.
It does.
We've covered a lot of ground today,
We have.
from their impressive performance in the Indian market to their ambitions for global expansion.
And their commitment to sustainability. A
Yes,
very impressive company.
it is. And, their story, I think, really highlights what it takes to succeed in the pharmaceutical industry these days. It's not just about producing pills anymore.
Right.
It's about understanding the market-building trust with consumers and innovating constantly to stay ahead of the curve.
And they're proving that it's possible to achieve both profit and purpose,
Sure.
to be a successful business while also making a positive impact on the world.
So as always, we want to thank you for joining us on this deep dive.
Thanks for listening, everybody.
We'll see you next time.